Before we get started, I would appreciate if you could subscribe to my YouTube channel. Thank you. Hello everybody, welcome back to my channel. So today I'm going to be talking about this message from T's Crypto Spot, and the question I'm going to be answering really in this video is this question that if it's just messages, why would they need a liquidity bridge? Because as you can see, it says here liquidity bridge and settlement tests for Euro1 participants. So let me just go through the comment that T left. So T is saying the Eurozone's going live in November is just for messaging. In other words, that's what people like me are saying. HVPS, which is really RTGS, has nothing to do with liquidity moving real time via digital assets, and it only refers to messages. Now, what I'm basically saying is, yes, in the Eurozone, they are going to go live for just messaging only, and that HVPS, which is RTGS, is not going to be moving liquidity via digital assets. That's what I'm saying, yes. And it only refers to messages, basically, yeah. So even though the patent states there's a DTI where the server chooses a liquidity or smart contract token to facilitate utility for bridging, there's zero relation here. And what I'm basically saying is that what T is talking about here, the DTI, the patent, and so on, I'm saying that's important because it's going to play a part in the future when they actually use a DOT-based RTGS system for settlement. But in November, they're not going to be using one. But when they do, that's when this patent, the digital token identifier, DOT RTGS systems, and so on, that's when they come into play. So the reality, last time I checked, ISO 20022, just the messaging portion, isn't liquidity based. And that's true. It's not liquidity based, but ODL is. Okay, yes, ODL is liquidity based. And the actual movement of liquid value is rooted in liquidity. Interesting. What these screenshots say. And I'm going to go through these screenshots. But hey, what do I know? Ha ha ha, silly me. And he calls me out, audacious investor. And he just messes around here. It's funny. XRP has nothing to do with on-demand liquidity, which means liquidity happening Q3 this year has nothing to do with HVPS, RTGS, and the movement of value to coincide with the value of the messages sent through institutions. Bravo, nothing may happen in November, but you had better believe that it's coming at some point. So let me just tell you what T's stance is and what my stance is before I actually go into this video and discuss these screenshots. So T's stance is basically this. The ISO 20022 is going live in November in the Eurozone, and it isn't just for the messaging layer, but it also is for the RTGS system, and there's going to be a change in RTGS system where they're going to be using DOT-based RTGS systems for the actual movement of liquid value and settlement, such as XRP and the XRP ledger. So that's what T's saying. Now what I'm saying is this. ISO 20022 is going live in November in the Eurozone, and it is only for the messaging layer. However, the RTGS system will still be a non-DOT based system that uses pre-funding of liquidity and correspondent banking still for settlement. And I believe all that other stuff that T said about DOT, the DTI, the patents, etc., they will be used at some point in the future when they move from correspondent banking to a DTL-based RTGS system. That's when all that stuff comes into play, but it's not happening in November. So 2 screenshots are basically posted, and it's the second screenshot where it mentions liquidity bridge and settlement tests for Euro1 participants. Yeah, so T is basically implying that this liquidity bridge indicates it's going to be a DOT-based system, such as XRP. Now, in the comment section, we had a little exchange, which was cordial and respectful, and I basically explained to him in more detail what I'm basically saying, my stance, because he was saying he doesn't understand, or he finds it odd that they would implement a super fast messaging standard such as ISO 20022, yet they'll keep the movement of liquid value slow to 3 to 5 days still. So he finds this odd. The RTGS system is going to be slow, but then the messaging standard is going to be fast. So what I was trying to explain to him here is that, and this is important guys, if you have to watch my videos, because I've done a series on this, and the funny thing is, what I'm going to show you in this video is I've already explained it in part 1 of the video series. I literally explained what I'm going to show you, what the liquidity bridge is in part 1 of the video series. But in part 3 of the video series, I show you that upgrading to ISO 20022 in the messaging layer actually enhances the sending of the messages. So it speeds it up. So because it speeds it up, what does that mean? If all the banks are using the same common standard, which is ISO 20022, and there's no friction now in terms of them processing the message, and liquidity is already pre-funded, so that does mean it increases also payment speeds, because what slows the settlement down is the messaging layer. Imagine the liquidity is already there in the banks, and then the messaging layer is super slow. That means it leads to slower settlement. But if the messaging layer is much faster, so it flows through the banks quicker, they can process the messaging quicker, then the crediting and debiting of nostro-vostro accounts can happen more or less quicker as well. So ISO 20022 does improve the settlement of payments in a non-DLT based RTGS system. And it would improve the settlement of payments in a corresponding banking system as well, if and when all the banks are on the same standard. So I tried to explain to T that it's not just a hyper-fast messaging standard and the RTGS system is going to be slow. The RTGS system is going to improve with the speed of the messaging, even in a nostro-vostro situation, because there's going to be pre-funded liquidity already in the banks. All they have to do is credit and debit accounts accordingly, and they could do that fast as well. So I tried to explain that to T in this comment, and I also tried to explain to him that basically what he's saying about the DTI, the patents and all that stuff, I do believe it's going to be implemented, but I think it's the future plan and it's not happening in November. So I hope that makes sense. And then T responded by saying, the audacious investor, I've honestly thought the same thing initially. So he's saying what I'm thinking, he actually thought the same thing. He thought that was the plan all along, but then they would stall it out as long as they could. However, I think with things rapidly getting worse, so he's saying because of the state of world affairs, what's happening in the economy, the whole world, especially our monetary system and currencies, things are getting worse. He thinks that migrating to an RTGS, HVPS blockchain environment and using distributed ledger technology to settle sooner than later, okay, is what they're going to do. And then he says, is that in November? Well, it may or may not be. So now he's saying it could be or could not be in November. But I'm going to say I don't think it's going to be in November, and I'm going to show you why. Because remember, if you believe that this liquidity bridge means ODL, then you have to also believe it is going to be in November. You can't say that this liquidity bridge is ODL and XRP, but then it may not happen in November. That's like, it's a bit contradictory. It has to be. It's either going to happen and they're going to use it, or they're not going, and it's not, and it's ODL, so it's happening in November, or it's not ODL and it's not happening in November. So, but for the sake of the world, it would definitely be the best option to start this as soon as possible. I agree with it. I agree with him. It would probably be the best option to start it as soon as possible. And no problem, man. These convos are healthy and a necessity in the space. And yep, big respect to T, because look at this interaction between us. He's not insulting me. I'm not insulting him, and we're just basically both having an intellectual conversation, challenging each other's points. So let's get into this video. So these screenshots here, I actually found the two links where they've originally come from. So one's come from this website here and another has come from this website here. So I'm going to go through both of them and I'm going to show you what liquidity bridge actually means. So here it is, ISO 20022 changes on the final stretch, and this is where this statement here comes from. Let's skim through this document. So few would contend that the planned migration to ISO 20022, the new global payment messaging standard, has been straightforward. The migration strategies proposed by the major market infrastructures and SWIFT have, for a variety of reasons, been a moving target, with significant changes being announced as recently as March this year. But now, with less than 7 months to go before the European high-value and cross-border payments will go live over the weekend, 19th to 20th of November. Okay, so that's when they plan to go live with ISO 20022. It's the 19th and 20th of November. And that's the European high-value and cross-border payments. Okay, so let's read ahead. It says another bump in the road. In 2020, as the COVID-19 pandemic unfolded, the world's high value payment systems, RTGS systems, as well as SWIFT in the correspondent banking space, announced significant changes and delays to their migration strategies. So remember what I'm telling you. I'm telling you that ISO 20022 is going to go live and they're still going to use correspondent banking. And in the document, in the screenshot where this was taken from, the actual website mentions correspondent banking space. So why are they mentioning correspondent banking space? Why are they talking about that the plan was to go live with SWIFT and RTGS systems in the correspondent banking space, but there was delays? They are still going to be using correspondent banking. Now, these delays were seen as a much needed respite during a particularly resource intensive period. At the start of this year, however, it seemed as if the move to ISO 20022 was finally back on track. So, because of the pandemic, there was a delay, but now they are back on track to implementing ISO 20022. So, basically, this document actually just talks about going live with ISO 20022 for banks and the challenges that they have faced with going live with ISO 20022, the testing that they have had to do, and the go live weekend, what they're preparing for, and so on. So if we go to this part here, it says we are set to replace our core banking system in January 2023. This is what the Bank International Luxembourg is saying, the BIL. So the BIL Bank is saying we are set to replace our core banking system in January 2023. So whatever their core banking system is, they are set to replace it in January 2023, which means that come November 2022, when the migration to ISO 20022 goes live for high-value payments in Europe and cross-border payments globally, we will be using our current and soon-to-be legacy core banking system. So when ISO 20022 goes live, they are still going to be using their current core banking system because that's what they're saying. As such, our plan is to make the minimum number of changes required before then, migrating with a big bang approach once the new system is in place. So when in November 2022, the BIL Bank is going to actually make the minimal amount of changes required to be compliant with ISO 20022 because they haven't upgraded their core banking system in January 2023. Now, after they upgrade their core banking system in January 2023, they're going to do the big bang approach once their new system is in place. And for this strategy to work, we are relying on an on-site translation for European high-value payments and SWIFT inflow translation for cross-border payments. And they're saying for the strategy that they want to work, there's going to be a translation system. I've already covered this in my videos, where there's going to be a translation system in the messaging layer for banks that are still on the old MT standard and banks that are on the MX standard. And the translation system would help translate messages between the two standards, and SWIFT is going to provide that. And all of this basically has nothing to do with the RTGS system. They're just talking about the messaging layer. None of this has anything to do with the RTGS system. This translation system is to do with the messaging layer. And you know when it says European high-value payments and SWIFT, high-value payments is what is processed by RTGS systems. So the European high-value payments, what processes the European high-value payments is the target 2 system, T2, and T2 is upgrading to ISO 20022 on the messaging layer, not the settlement layer. The settlement layer is still going to be the T2 RTGS system, but the messaging layer is going over to ISO 20022, and that's the only thing that is happening. Now, that is what this document is about. It basically says nothing in this document, on this website, about changing to ODL or using a DLT-based RTGS system. So this is where the liquidity bridge has come from. It says in Q2 to Q3 2022, the liquidity bridge and settlement tests for Euro1 participants. So what does this liquidity bridge mean? Does this liquidity bridge mean ODL? Now, because I'm saying to you, they are going to be using correspondent banking systems with a non-DLT based RTGS system, then how can I believe this liquidity bridge is going to be XRP, because XRP is DLT based. So let me show you what this DLT bridge actually means. So it talks about ISO 20022 migration. Payment systems across the world are migrating from legacy standards to ISO 20022, an international messaging standard that is expected to improve payment processing efficiency and interoperability. So what will change? The core structure and key benefits of Euro 1 will not change. Now, Euro 1 is basically, it's similar to an RTGS system. Like you have the target 2, which is the T2 system, which is for an RTGS system for the central bank, and then you have an alternative, which is called Euro 1, and this is an RTGS system. So it's saying the core structure and key benefits of Euro 1 will not change. Okay, through the migration to ISO 20022. Now this is strange, because if the migration to ISO 20022 is going to be the RTGS system is going to change to DLT based, then how can they say the core structure and key benefits of Euro 1, which is not DLT based, will not change through the migration to ISO 20022? But shouldn't you be changing to a DLT based system? Okay, anyways, let's continue. The key change is that instead of processing payment messages, so it's not about the settlement layer that's changing, only the messaging layer. Instead of processing payment messages via FinMT messaging, Euro 1 will use ISO 20022's data-rich standard, which can carry more payment information and is more flexible. So as I'm showing you again and again, the RTGS system, the settlement layer, is not being upgraded. The only thing that's being upgraded is the messaging layer, the messaging standard, and it tells you here what will change. The Euro 1 is not going to change. It says here, will not change. However, the only thing that's going to change is the FinMT messaging to ISO 20022. So let's look at Euro 1. What is Euro 1? Euro 1 is a unique RTGS equivalent large value payment system. So it's an equivalent system to an RTGS system, which can process large value payment systems. So I'm going to call it a RTGS system for the sake of argument. So Euro 1 is the only private sector. So it's part of the private sector. It's not run by the central bank, which is a T2 system in Europe. It's an alternative in the private sector space called Euro 1, and it can process large value payments. It's an RTGS system that can process large value payments. So Euro 1 is the only private sector large value payment system for single same day Euro transaction at a pan-European level. The Euro 1 system processes transactions of high priority and urgency. So as you can see, it's an RTGS system that's not DLT based, and it can process high value payments. And it says the Euro 1 system is scheduled to migrate to the ISO 20022 standard for high value payments in November 2022. So in November 2022, in alignment with Target 2. So Target 2 is migrating to ISO 20022, and Target 2 is going to be upgraded to T2. That's the central banks, the European central banks RTGS system. And then we also have Euro 1, which is in the private sector, which is an RTGS system, and that's also going to be migrating to ISO 20022 in November. And as I've shown you already, it's to do with the messaging layer, not the settlement layer, because it told you on this part here that the only thing that's changing is the messaging, and the core structure and key benefits of Euro 1 will not change for the migration. Now, if it's going to be DLT based, it has to change, right? Shouldn't it? So let me go through this document here, and I'm building up to showing you what the liquidity bridge is. So payment systems worldwide, a snapshot. With regard to liquidity in RTGS systems, operators were asked to indicate the main sources of transferable funds in their systems. Results are summarized in table 11.6. So we're going to go down to table 11.6, and this is the sources of liquidity in RTGS systems. I've already went through this in part 1 of my video series. And let's see where do RTGS systems get their liquidity from. The opening balances and funds received from other participants during the day. Participants can use part of their reserve requirements. Participants is all sources of liquidity basically for RTGS systems. Participants can use all their reserve requirement balance. Lines of credit between banks. The RTGS operator allows collateralized current account overdrafts. These are all sources of liquidity. The RTGS operator grants collateralized credit either in the form of a loan or a repo. Liquidity comes from the direct participants that are connected to the RTGS system. Now let's look at Euro1. And this is a document basically that was in 2010 before XRP before it even existed. And this is how RTGS systems for high value payments, large value payments, got their sources of liquidity. They got it from direct participants. So what are the direct participants of Euro1? These are the Euro1 participants. The participants are basically other banks that are directly connected to the RTGS system. That's what a direct participant is. So I'm going to give you an illustration, give you an example right now. So look at this diagram. This is a central bank, or this is an RTGS system. Let's imagine this system here is Euro1. These banks here that are connected directly to Euro1, they have an account with Euro1, are direct participants. So bank A, B, C, D are direct participants to Euro1 or the Target 2 system, whatever RTGS system it is. And the liquidity are going to come, the source of liquidity is going to come from these direct participants. They are going to be the source of liquidity for the RTGS system. And that's where the pre-funding is going to come from, these direct participants. Do you understand what I'm saying? So these direct participants is what's going to provide liquidity. It's not XRP, it's not on-demand liquidity, it's a system like this. Here's another diagram here to make it simpler for you to understand. Now imagine this is how it actually works. This circle here is the RTGS system of Euro1 or Target 2. And these banks are direct participants and they have a direct account to the Euro1 RTGS system. And this is how it's going to work. Now, these banks provide direct liquidity. They provide liquidity to the RTGS system. And this is where the source of liquidity comes from, the direct participants of the RTGS system. And exactly as it says in this document, the sources of liquidity in RTGS systems, 93% said it comes from opening balances and funds received from other participants during the day. What are the participants of Euro1? All these banks. All these banks are connected to Euro1. JP Morgan, Chase Bank, ING Bank, Banco BPM, Banco Santander, major banks. And all these banks are going to be providing liquidity to Euro1. Now let's continue. So liquidity efficiency. By operating on a net basis, Euro1 enables banks to significantly reduce the liquidity required to support their payments business. Now let's see, are they describing XRP or XRPL? Thanks to the binding intraday limits in Euro1, individual payments do not need to be fully covered beforehand. Okay? Euro1 has a system whereby it has a debit cap system, and there's a cap basically to the amount the bank can actually give out, and there's a cap to the amount banks can actually receive. So this is how their system works. But let's continue. In order to further recycle liquidity, Euro1 offers a liquidity bridge, which enables banks to proactively and independently manage their liquidity. So this is what the liquidity bridge is. In order to help banks further recycle liquidity, Euro1 offers a liquidity bridge which enables banks, the direct participants that are connected to Euro1, to proactively and independently manage their liquidity. And it breaks it down, and we're going to go directly to here. Pre-funding takes place throughout the day, and liquidity distributions take place at the 6 most critical times to ensure the release of the maximum number of queued payments. So bearing in mind, if they are using XRP and the XRP ledger, why is there any need for pre-funding? Because there would be no pre-funding. With on-demand liquidity, XRP is the liquidity token. Banks are not pre-funding anything. The pre-funding only happens in the system that we have today, where banks do pre-funding for nostril accounts. So it says here, in regards to the liquidity bridge, the liquidity bridge is basically created for the direct participants of Euro1 to recycle liquidity. It's just a feature or a function. You can call it a liquidity channel, liquidity corridor, whatever. They call it a liquidity bridge, and it's a tool, it's a feature to help banks manage liquidity in the Euro1 system. They're not talking about on-demand liquidity. And it says here, pre-funding takes place throughout the day, and liquidity distributions take place at the most critical times. Banks that have reached the maximum level of their direct cap can pay in funds from their target 2 accounts. The bank has, as a result, acquired increased sending capacity against pre-funded liquidity. You see what I'm talking about? They're talking about pre-funded liquidity, and they've got a cap system here. With XRP, there will be no cap system. The liquidity distribution algorithm allows for the pre-funded liquidity to be recycled. What do you mean liquidity distribution algorithm allows for what pre-funded liquidity? If this XRP, there is no pre-funded liquidity, but they're not using XRP. That's the point I'm trying to make here. Okay, it says liquidity distribution from Euro1 to participants in central bank money, and it's just showing you how their system works. So Euro1 Liquidity Bridge. Euro1 is geared at assisting banks in keeping costs down by enabling them to optimize their liquidity use. The system's liquidity bridge makes it possible for banks to withdraw excess liquidity from the system through 7 daily liquidity distribution windows. And these are the windows here. So this liquidity bridge basically makes it easy for banks to recycle liquidity because they can take it out of the system, the excess liquidity that's in the system, and they can do it from the 7 daily liquidity distribution windows. Does this sound like XRP to you? The liquidity bridge also enables the banks to inject additional funds into Euro1 throughout the business day in order to allow for additional payments to be processed. Now, shouldn't the whole idea of XRP be that banks don't have to inject liquidity and tie it up? They just use XRP, and that provides on-demand liquidity without no need for pre-funding. Exactly. So why are they telling us here? The liquidity bridge also enables the banks to inject additional funds into Euro1 throughout the business day in order to allow for additional payments to be processed. This functionality supports the banks in resolving any queuing situations. Because guys, this liquidity bridge has nothing to do with on-demand liquidity. It's just a confusion between the two. So key features: immediate finality of processed payments. Okay, let's go down here. The minimal counterparty exposure managed by participants. So liquidity in Euro1 is generated by the mutual giving and receiving of bilateral limits between the participants. Does that sound like XRP? Liquidity in Euro1 is generated. How is liquidity generated? By the mutual giving and receiving of bilateral limits between the participants. It basically is saying that liquidity comes from other direct participants. Liquidity comes from these banks here. That's what it's saying, that liquidity in Euro1 is generated by the mutual giving between the participants of the RTGS system, Euro1, and receiving of bilateral limits between the participants. The bilateral limits granted by a Euro1 bank to each of the other participants in total provide the multilateral net receiving limit. They've got this credit cap and debit cap system. But my point I'm trying to show you here is that liquidity bridge has nothing to do with on-demand liquidity. The liquidity bridge is basically, it's a tool, it's a feature to help direct participants that are connected to the RTGS system all provide liquidity to one another. That's what the liquidity bridge is all about. And it says here, all participants contribute in equal shares to a liquidity pool. So where is liquidity coming from? The liquidity is coming from the direct participants because they're going to share and provide equal shares to a liquidity pool. So, I mean, I could say this all day. Participants are granted by each of the other participants a mandatory limit. There is no limit with XRP. There is no liquidity pool as a result of participants contributing in equal shares to a liquidity pool with XRP. In XRP, we have on-demand liquidity from the liquidity hub, and that's to do with XRP. But in this case, they're not talking about XRP. They're talking about liquidity being provided in the form of cash, in the form of currency. And the liquidity is not coming from a XRP token. It's coming from the direct participants itself. That's what it's talking about here. This system, this liquidity bridge, is not describing XRP, but it's describing how RTGS systems source liquidity, and they source it from participants of the system. And the participants of Euro1 are these banks here. And these banks here are going to have a liquidity bridge. It's connected all between them, and it enables them to share liquidity, distribute liquidity, monitor liquidity, recycle liquidity between the banks in order to have liquidity for the Euro1 RTGS system. Look at it now, now that I've explained it to you, what does it say to you? In Q2 to Q3 2022, liquidity bridge and settlement tests for Euro1 participants. Oh, now it makes sense. They're not saying XRP is going to live, they're not saying ODL is going live, they're saying the Euro1 participants, the participants of the Euro1 RTGS system are going to have a liquidity bridge between them for settlement, and they're doing tests on this liquidity bridge system. And the liquidity bridge isn't ODL, it isn't XRP, it's just a tool, it's just a feature that enables liquidity distribution, liquidity monitoring, liquidity recycling between Euro1 participants. So guys, as I've tried to explain to you, this isn't proof that ODL is going live in November. In fact, it further proves that they're going to be using a non-DLT based RTGS system, Euro1, and they're going to be using Euro1 to process payments and settle payments, and they're going to have ISO 20022 in the messaging layer because it's going to be a hyper-fast messaging system, and that's going to improve the payments. And I've discussed all this in part 1 of my video series and part 3 of my video series. In part 3 of my video series, I literally break down the stages from legacy to ISO 20022 via correspondent banking. And the next stage, I believe, after that is going to be what T is talking about, and that is ISO 20022 in line with digital assets, DLT RTGS systems, and XRP for liquidity. But that's not what's going to happen in November. So I hope I've made that clear, and I hope it's easy, and I hope you guys now understand what this liquidity bridge actually is. And thank you for watching. Don't forget to like, subscribe, and hit the bell notification icon so as to not miss my next video.